All right, hello everybody, and welcome to my market open live stream. This is Kevin. I also go by the Professor and Market Monk Picks on Twitter. And so today I wanted to discuss kind of what I've been looking at and some of my observations just based on the pre-market price action. And let me get my door really quickly. Okay, so what I have called up here is a page I haven't really shared on a live stream just yet, and this is the hot chains and tickers page, and it's something that they have in unusual whales that can just kind of give you a sense of what some of the highest demand contracts are on a given day, and you can break it down by sector as well. So one of the first things you'll do is you will hide index ETF, and then you'll see this is for the overall market, and one that stands out. Tesla 800C, was way out of the money, but as we see what Tesla did this morning, that actually is one lotto that's going to kind of pan out. So not quite in the money or anything, but certainly will spike in value at open quite a bit. So those are pretty well on that. But so in any case, this is kind of for the whole thing, and you can see that when you just do it for the whole market, it's kind of dominated by Apple and Tesla. So what I usually do, and my approach in general to the market, is to look at it sector by sector, and see what kind of stands out to me there. And there's two aspects to this. There's two ways to read this, and both are pretty useful. So the first is, these are just some of the major tickers that show up, and I trade quite a few of these. SBSW is a gold stock. HYMC you might be familiar with through their connection to AMC, and AUY I think is probably one of the best gold stocks that you'll find, and I say that just because it seems to get on kind of a steady uptrend. You can play monthly options on it. You can play shares with it. I kind of like to do a combination of the two. And AMRS is a chemical stock, looking very, very bullish here in terms of its call volume. So that's what this refers to. And you also see this calculated as a put to call ratio, where you have the uh, number of puts divided by the number of calls, and you typically want a ratio around zero point 0.7 or lower, and that's considered bullish. I mean, if you're wanting to short something, you want it to be higher, but that's considered like the pivot point. So we get to like AMRS, you got this kind of microscopic amount of puts, and it's continuing to fall. That's an indication that things might be turning around for that. All right, so AMRS, and there you go. So great day yesterday, up another 7% this morning. And this is a stock with a very long way to go. And so while I wouldn't necessarily buy it when it's up 6%, you haven't really missed the the move on it quite yet. Okay, so 624 2C, that's a contract that stands out. 527 250C, no real open interest there. And so yeah, you can see. I mean, it's not a stock with like a huge amount of volume, but really, what stands out, you look for the ones that the contracts that do have a lot of volume, and selling a leap at 4C. I mean, that's way out of the money. I'm not surprised that that's bearish, but selling a put at 2C, you can see is very bullish, or buying a call in for December at 2C. So if you're wanting kind of a long swing on something, this one has a lot of potential. And if I go into the day chart here, and I mean, and you can see where we are, and you have to go pretty far back to get to these levels under $2. So I like it as a short swing. I like it to get back to $2 for sure, and I do think it'll make a move to 3. And if we can get back in this channel here, that would be good as well. But anyway, on a day where all this tech is going crazy, and like looks like Apple might run, and Tesla and all these, I do kind of look at stocks like this too, and this is really where this hot chains and the option dashboard, it's a really good way to kind of keep me honest as a trader, and keep my approach balanced, to where if a sector is just really hot, I'm not just purely just trying to chase everything that's running there. I'm thinking longer term. I'm looking at looking for stocks that are bottomed out. I'm studying now for next week's opportunities. And so this is where it starts, and that that sector by sector approach is really what helps me do that. Traders have a lot of different approaches. I mean, some just trade one or two tickers and that's it. Some just trade SPY. It's not for me to say like what's right or wrong with that, but I go for a kind of broad approach. I keep track of a lot of different stock sectors, flow within them, and try to build an approach based on that. So I go into communication services, and you're going to see a lot of AMC, not surprising, and especially AMC weeklies, people trying to capitalize on the momentum there. And you can see the volume compared to the open interest for yesterday, absolutely insane. Everybody trying to FOMO in as it spiked up, and kind of went from there. Twitter just got destroyed this morning based on an Elon Musk tweet, and that happens. One of the reasons I kind of stay away from Twitter, especially lately. Well, because so the thing about Twitter, if everything goes through and he buys it, and whatever that share price is, that's kind of the ceiling on the stock price to me. I'm not an economist. I'm not a licensed financial analyst or anything like that. But if he's going to buy out the company for this particular price, it kind of limits the upside. That big upside move on the rumor on that already happened. So the only real movement could be down if something goes wrong, which is what we saw here. So certainly there was an opportunity to try to swing puts on it, and if anyone who did that, that was a really good idea. But I didn't go into it thinking that. I kind of like scenarios where there's more upside, so that's why I stayed away from that one. But some stocks I do like here that I play quite a bit. I like Facebook. I don't like Facebook, the service, but I like the stock. And we can see that there is some activity there. One approach that people take to this hot list, and let me get in a different sector here. I'll jump over to energy. So one approach that people take is, what's the stock that shows up multiple times within the hot list with at least one or two strikes out of the money that expires within the next several weeks. So that's a lot. That's kind of a lot of criteria. But I'll break it down again. So you look at this list. You look at a sector within the list, and you say, where is a stock on this entire list that shows up 3 or 4 times, is where the chains are bullish and where at least several of them are out of the money and where leaps are excluded. So you want short-term contracts, bullish, out of the money on at least one or two of them. Okay, so I'm in here. What can I find? Here's uranium, CCJ. Does CCJ this is some really significant volume on this contract, and does it show up elsewhere? Okay, here's another one. That's a little far out though, so not really gonna go for that. And here's one, July. So it's a little bit further out. So CCJ could have a very good day today, but it doesn't quite meet the criteria that I'm looking for in this particular exercise. Okay, so let's try instead. Let's try Oxy, and I'm kind of I'm doing that teacher professor thing where I know the answer but sort of walk you through it because I knew Oxy would fit these criteria. So okay, Oxy 60C, volume exceeds open interest, contract is bullish. 62.5C, weekly, volume exceeds open interest, contract is bullish. And 65 weekly. So that's good. I wonder though, what do we have for next week? Because that's probably what I would want to actually be playing on it. And let's see here. Well, a lot of 617, more 513. This is something you here's 520 60C. Contract's looking a little bit bearish, but overall the flow is pretty bullish on it. Here's another one, 59 65, a little bit bearish. Okay, so kind of seen enough. That in and of itself might lead me to watch list Oxy. I don't play 0 DTE on Oxy, and there's just really there's no reason to. The moves on it are strong enough that you can get a good percentage just by just playing the dips on it, and then you can kind of short it at the top as well. And this is a line I have on it. Anytime it gets close to this line and bounces has been a good time for calls. 56.99. I think I maybe had meant 57, or maybe a few cents lower. Like I said, my TA is a little bit basic, but this is an old trigger I had on it, and it has panned out very nicely as a kind of magnet for the stock. And so I played Oxy in this range here, and you can see this was a resistance down at 41 that I was looking for it back here in February. I was looking for it to start to break through that, and then it did in a really kind of huge way. And then it sort of settled in around this line, and I drew this line back here. And again, I'm not exact. I mean, I think there's some people who might capture more wicks or whatever, but anyway, so when it dipped into this range down here, This was kind of a pivot point where I wanted to see it try to recover that line. Otherwise, there's a kind of a big gap here and it could head down. Now, another factor with this, why I didn't think it would just head all the way back down here, is that it's an oil stock. And an oil stock in the spring was not just going to give it all back. That just wasn't geopolitically and with commodities pricing and all of that. That just wasn't very likely. So that's why my approach to oil stocks has been and continues to be to to buy them when red and also in terms of like a swing, and then also just to play those daily bounces, those daily price movements. And you can see that Oxy really does give that to you every day. And so if this is the case, why not just play the price action? Who really cares about option flow? That's a fair question, but to me, um, I like to play calls on stocks where I can map out the strikes that the whales are after, and can just have some conviction that if a stock dips, there's going to be some flow to push it back. So when Oxy flushes it open, a stock can flush it open, and it might not recover. It might bounce a little and then just go further down. But here it's sitting at my line. It is kind of it makes a move here, and you could trade this move. And again, this is a 3-minute chart. So in the span of 1, 2, 3, 4, 5, 6, 18, 20 minutes, you have a nice trade. And so if you have and the contracts are pretty cheap on it. So let's say that you have 5 contracts or something, and you're able to, you see this doji here, or maybe you wait for confirmation on this candle. You enter and you just kind of scale out along the way, and you see it weaken, and there's a decision time. So maybe you sell most of it. Maybe you keep one. I'll keep one. I'll have my stop loss wherever I entered, and it got kind of perilously close here, and then it went back up. Or you can use these pullbacks to re-enter, or you can use the pullback itself as your first entry. It kind of depends if you're consider yourself like a reversal trader or a pullback trader. I mean, whatever. The best trade would have been to carry from here all the way to here. It's not That's not easy to do. I mean, you can look at a chart the next day and kind of catch the top on it. But I will say that $60 is a point where the stock's likely to run into trouble, and that is why do I say that? Well, it's kind of a function of a couple of things. There's a psychological aspect to a round number like 60. So for that reason, you might want to get out of it, uh, or at least like get out and then see if it'll confirm and retest at 60. I mean, Oxy is probably going to break well through 60 again, but I mean, there's leaps on it to 75, or July contracts to 75. But okay, so anyway, the Oxy's page here, you can see that the scenario here all day, very bullish, high volume, what you like to see when you play options. And okay, so as you get to calls over $60, you can see that the flow on it, and like for 70 next week, the flow on it is very bearish. So the whales are not quite ready to see it there yet, and it's likely um, to bounce around a bit uh, before it actually gets there. So in any case, that is something that we can look at, see what's going on in our Discord room here. All right. So as we go back to Oxy, so again, $60 is a level that you would want to scale out. So then, when can you consider re-entering? Well, you can see it didn't get all the way back to my line or anything. Here, this is a point where I don't like to enter around here. And I don't say that just because of what the chart did. But let me tell you what I see here and why I don't enter positions on a pullback like this. Um, the the RSI to me and I might overemphasize the significance of RSI, but the RSI to me when it's here at like between 40 and or like 60, if I'm thinking about a short position, it's kind of no man's land to me. It's not oversold enough for me to feel safe about entering. Because I feel like it could just drop lower from there. And if we look at like here, well, even here, the RSI was pretty low, and I may have actually entered. I mean, I didn't, but I'm just saying this is a setup where I might have entered here. But there's a couple other factors that go into it. If I'm in contracts that are like 2 weeks out, and I enter here, and it dips, I mean, who cares? Like, I still might be okay. I might scale in. I might just buy some here, buy some on a dip, and my stop loss would maybe be below this line. If it breaks through my line to the downside, then I'm wrong. And because this is the end of day, this might be like when I'd start a swing on it, right? And so then you can see it kind of consolidates here, and then it did actually move up, and then it was up pre-market. And again, so it's all about kind of maximizing your possibilities. I didn't re-enter Oxy yesterday because it didn't dip enough for me. I actually wanted it. I wanted it down here. I wanted it to test that low of the day, and it didn't do it. Oh well. I'll come at it again the next day. But I had already made a morning trade on it. Was perfectly happy with that, and now it's up pre-market, and we'll see what it wants to do. We'll see if it gives that back, or if it continues. So I got a question about a firm, and yeah, let's take a look at a firm. So a firm, basically flipped the script on fintechs. The approach for earnings had been to just short all of them, and you make money. If you did it with Upstart, you made a lot of money. And so a lot of people who did it with Upstart probably doubled down on a firm and then lost it. That is what happens with gambling. But in terms of the aftermath and the setup that a firm has, going into today, the um, the flow on it was actually in the most active chains, uh, kind of mixed. Whales actually got destroyed on these 20 and 21, and let's see if what it's doing. So yeah, so 40%, absolutely just staggering movement on this. And so the question then is, where does it go from here? Because this list really is going to tell us what what it was like going into earnings. And you can see there isn't much activity in the um, higher strikes. And so that's what today you would want to get in there, and you would want to see what potentially is going on with that. So get into the last 2 days. I will go to ask side, and let's bump this up to 20,000. Okay, so let me see what I see here in terms of strikes. These, deep in the money puts. I'm going to talk about that next week. I'll talk about why they do that. But what I'm looking for are kind of the options that might move the thing. So the flow going into today was bearish, and so people were skeptical about what a firm would do on earnings, and calls. The highest volume of calls was at 20. So what I would say is, with a firm, what I would be looking for is the potential for whales to really decide to push this and get into some of the higher strikes, maybe even up into the 30s and 40s, and just we'll kind of see where they want to go from there. Okay, so let me just a quick rundown of the indices and kind of what I'm looking at today. And I'll flip to my daily watch list here. So these are kind of the stocks that I'm most interested in, and I'll add Oxy to it. Oops. And Macy's too. So just to kind of focus my attention in particular, I do always keep an eye on QQQ. You can see it had a really good morning. And what's the scenario for QQQ? I don't really get into the overly prescriptive technical analysis on it. But what I would say is that if we're gonna have a bullish day, if we're not just gonna give all this back, I would maybe look for it to try to test 300 if we're going to have just a phenomenal day. Given the market that we're in, it's possible, because so much is oversold, and you have all this euphoria happening, and these euphoric runs in a bear market are kind of the thing. The question, I think, is, are we going to be able to sustain that? And this is why trades that open on stocks that are green are risky. So you might consider that. But okay, so some stocks I look at. I played net puts on earnings and did very well. Hindsight should have maybe flipped over to the call side, and you can see what this just keeps going. Net stock I play a lot. Gave 2 entries yesterday. Tesla kind of leveled out a bit at it touched, went all the way to 785, but it broke 780, and so we're going to see if it can push through there, maybe even get to 800. Amazon, very nice. Chewy, always a good Friday stock. You see a lot of Twitter traders doing that. Upstart, great move on Upstart. And Dash is one I play a lot. Massive day yesterday, continuing today. Oxy, I mentioned already. And then another good day. So this market gives you so many opportunities, and it's all about patience. I think that's kind of the biggest biggest key is, kind of see what they do at open, and then um, you can kind of go from there. And so yesterday, what most stocks did was they spiked it open, and then they gave it all back. And that the day before, they had a decent pre-market, and then just fell down, a lot of them. But anyway, so Macy's is a stock I trade a lot. It's another one of those where I have a line on it. Been a while since it's been in this channel, so we're kind of in a new setup here. So I would probably look for it to bounce, yeah, right around where we are. If you can see, I don't have a line drawn, but you can see kind of further back here some of this former resistance that it turned into support and bounced and had that huge run, and then got in a channel right around there. So so yeah, if we get back into this area, and can bounce off of here, it could certainly go back up to this level, and then we'll see from there. But 21 to 25 is a great trade on it. Okay, so anyway, so that kind of is my preparation for today. Some of what I'm looking at. Next week, some of the topics I'll get into here. I'll talk about my call and put triggers, how I go about using those, how I calculate those, and those option watch lists I do, and kind of just this the same deal. So I've been enjoying doing this. It's been an excellent experience for me. I hope you enjoy it as well. Those of you who join live or watch later, feel free, like and subscribe. Share it if you find it useful. And as always, any questions or feedback are always welcome. So everybody have a great trading day, and I will be around on Discord for those of you in there, and best of luck.